Taiwan index 2% up. Hang Seng holding on to gains of more than 1.5%.
The CNBC-TV18 poll throws up a near 8% expansion in the company's EBITDA.
But as I prepare to leave office, our friends are strong, our enemies are weak.
20 is conquered now, and 40 is in sight. So 23,347 is the first resistance.
Post-COVID, rural had slowed down for obvious reasons.
What they have announced is they will start a daily repo.
UK has upgraded Paytm to buy from ad.
130 odd points higher on the Nifty.
Aspiration to get to $2 billion and 17 to 18% EBIT levels.
Total AP, that is ahead of poll, up 12% at about 3569 crore rupees.
Yes, we have got the approval from Government of India to go ahead with the QIP plan.
23,300 on the Nifty as the benchmark indices gain close to about 0.3%.
We left the studio half an hour ago. It was still at 23,320. It's still at 23,320 and we are awaiting some very important results today.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
And the Nifty is still at 23,300. It's been that kind of a day. We had a gap up opening. We slipped about 100 points from the top early on. But after that, for the last 4 hours or 5 hours, the Nifty's been hovering around 23,300, give or take a couple of points. Absolutely straight, quiet, consolidation kind of session. The mid-cap index higher for the 4th day in a row, outperforming with a gain of close to about 1.2%. Global markets were upbeat, but again, in the Asian market, barring the Taiwanese market, which ended with a gain of more than 2%, the rest of the Asian markets, the gains are similar to what we're seeing in India. So a Hang Seng, a Nikkei, a Kospi, these markets are up close to about, okay, in mine, Hang Seng showed actually a smaller gain. But in some of the other markets, the gains were actually about 0.3 to about a half-odd%. The dollar index has eased, from 110, it's down to 109. The ceasefire in Gaza, all that is helping on the sidelines.
Well, that's right. The softer dollar index is good. Have you seen peak Trump? That's very, very important because, the optimism on President Trump taking office on 20th of January, that's what's pushed up the dollar index, which has cooled off a little bit. So the good news. One positive today is the Nifty Bank. That's the one that was dragging. That was the underperformer. And that's made a higher high yet again. So a higher high from the Nifty Bank, a higher low as well. It's up close to around 500 points. The bulls will take that. We had a one-way slide. The other positive is if you pull up the number of stocks advancing, you have close to around 2,000 stocks that are advancing for around 500 stocks that are declining. So that ratio is still 4:1. And the breadth of the market is good. So the bulls will like that as well. However, the last 60 minutes, it could be rather exciting. Because just looking at the options data, it appears on the downside that 23,250 mark, that's the goalpost on the downside. While on the upside, it appears it's at around the 23,350 because the direction is right. You have the premium that's come down in the last few days as well. So we'll have to keep an eye out on that. 23,350. That's the crucial mark that you're looking at on the upside. So that 100-point range is what is being played for. We'll have to see how that goes from here on. I think we should get the 23,300 call. Yeah, I think that one should come up for you on the screen. Well, how do you position yourself, though, in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, fill us in with what's the strategy? It's been an okay session. 80-point gain, Nifty Bank up 500 points. Well, pretty much okay. And Reliance Industries seems to be finding its form post the last 1 year's underperformance.
So now Reliance is one of my recommendations, but before that, the index. I think the Nifty, the good thing is that it's not falling much. The bad thing is that it still didn't sustain about 23,350. But as I said, I think, slowly if it can consolidate at these levels, then I think it should make an attempt to get past 23,350, 400 zones. And once that happens, I think the bounce back will extend by another 150, 200 points. So in that sense, I think, trading with mostly positions on the stock side, but with slightly long bias, given the fact that I'm looking at an upside continuation. Similarly, the Bank Nifty, the levels of 49,700, 750 are important. We didn't get near those levels. But as long as the Bank Nifty is sustaining above 49,100, I think there's a good chance that it could pick up steam again. So stay with trade with positive bias. On the stock side, as I mentioned, Reliance is something which I like. So buy here with a stop at 12.47. Look for 12.90, and then in a good case scenario, even 13.10, 13.20 could happen on the upside. That's one stock. And the other stock which I have on my list is Maruti. See, last couple of times, the stock prices failed to get past 200 average. Today is also trading around that same level of 200 average, which is at about 12.105. So buy about 12.150, then take a 100-point stop loss and look for targets of 12,450, 500.
Mitesh, hi, afternoon. We'll get to Yash on HDFC Life, but in the life insurance stocks, is there a standout chart?
Yeah, I think all these stocks, HDFC Life, LIC, and ICICI Pru have given some kind of a reversal, and no doubt that HDFC Life has also, given a very strong breakout of the gap, though it's come off the day's high. The 200 average for HDFC Life is at about 648. So closing about 650 would suggest further continuation, and one can look at 690, 700 as the target area. But I would still want to see the stock close about 200-day average. The other stock is ICICI Prudential Life Insurance. I think that's also showing signs of bottoming out. Now, this stock needs to sustain above levels of 644, 643. And if it can do that, then I think the first target is 675.
Okay, afternoon guys. Looking good, right? I mean, 80, 85 points higher. And market breadth, by the way, is super strong. Some 2,000 stocks are up, and you got about 600 stocks which are lower. So broader market actually outperforming what large caps are doing at this point in time. So, but one of the stocks, Mitesh, thank you very much for that. We'll come back to you for the BDST calls a little later. But one of the names which is not participating in this up move and which has fallen a lot, of course, is Kalyan Jewellers. It's, I think, down another 2% today. Mangalam is here to just recap, I mean, what has happened with the stock and the damage we've seen. And of course, maybe some reasons as well. Mangalam, over to you.
Absolutely, so if you look at Kalyan Jewellers, the ferocity with which the stock had moved higher over the last 12 months, it had nearly doubled over the last 24 months, nearly 5 or 6 times. So it's confounding the kind of decline that we're seeing in the stock price as well. This week, the stock is down about 16%. This month, it's down about 31%. And off its highs, the stock is down around 33, 34 odd percent as well, losing a third of its value in just the last few trading sessions itself. Remember, it was only in December series that the stock was first introduced in futures and options. And today, the stock also, trades in F&O band, which it entered yesterday itself. Fundamentally, the company has been reporting strong growth faster than everyone else in the industry, and all the clarity that the management, the street was seeking from the management has come about in the interview that they had given to CNBC-TV18, and alongside that, the conference call they held as well. So it's important to then look at who the participants in the share would be and who the major stakeholders of the company would be, and what could be any sort of moves that would take place out there. So if you look at the domestic shareholders, one fund that's standing out here is Motilal Oswal Midcap Fund, which over the last few quarters it has increased its stake from first at around 4.29% to now 6.3%. Whereas the other funds that we have, Franklin India and Sundaram Midcap Fund, they hold some stake in the company, but they've been reducing their stake. Franklin India, for instance, is down from 1.8% to 1.31% holding. Sundaram Midcap down from 1.3 to about 1% itself. What are the promoters doing? Promoters increased their stake in the company in August because the FIIs, Warburg Pincus had offloaded its stake. Promoter bought about 2.36% from Warburg Pincus at around 535 rupees. And even if you look at the December shareholding pattern, where promoters hold 62.85% stake, 19% of their pledge or their stake is still pledged. So to that extent, this decline in share price, will that affect that or not is the big question. That brings us to the third larger shareholder chunk, that would be the retail shareholders. Over the last few quarters, retail, which held about 4.5% stake in the company, that too has increased to 5.1%. And the number of shareholders has increased from 3.6 lakh to around 5.6 lakh as well. The final piece in this, assuming all the fundamentals of the company continue to grow and the analyst expectations, we haven't seen any downgrades or any sort of revision or commentary coming in from the analyst community itself. At peak, the stock was trading at 103 times, almost at par, if not more, as compared to Titan. And now it's come down to around 68 times. 1 year forward, at peak it was around 65 times, now come down to around 44 times as well. So a stock that saw a big rally is now giving up some of those gains, perhaps overvaluation, perhaps some of the concerns. We'll look at what the key stakeholders in the company are going to do. And all of this just points to one thing, the reason why Titan trades at a certain premium to the industry, because, we haven't seen such wild moves on stocks like Titan.
Indeed, Mangalam, well put. Titan has been the one that commands those premium valuations in the past. We have seen PC Jewelers, Tara Jewelers, just to name a few, and they just fell by the wayside. But that's the big talking point, this week has been Kalyan Jewelers. Deven Choksi is with us. Deven, what do you make of the stock? I'll tell you what, the largest shareholders, as Mangalam mentioned, one is the promoter entity who had bought stake at similar prices. Their hands are tied because they've entered that silent period, till the end of this month. I think January 30th is when they'll come out with the set of numbers. And also you have Motilal Oswal, I think as a percentage of their AUM, they have already hit the limit out there. So both the largest stakeholders, they can't come in there or buy more even if they wanted to. So, that's one point. What's your view on the stock? 800 rupees, now down to 530. Promoters bought at 530. Would you buy?
So, Nigel, I think few concerning points. One would be that expansion into the newer stores is happening at the franchisee model. So, which means that I think the margin, which is already thin, I think could further get thinner. That is, I think, a concern, and that could possibly affect the future outlook. And suppose with the strengthening of the dollar, if the gold prices has to come down, then at least in near term, I think that impact may be seen into the books. If not for long, but at least for near term, it may be seen in the books. So that could be the reason for which I think today the view is that the stock prices probably have firmed up, and I think it has topped up, I believe, in this environment. We immediately do not have any view, but we believe that I think the larger run that this company has had in this market, probably some amount of price correction is also equally due technically as well.
Okay, all right. Just one more stock that's caught everyone's imagination because of lab-grown play that's out there. Goldium. The stock in the last 1 year, I think it's up 3x. In the last few minutes, it's fallen to the low point of the day. Could be routine profit-taking. But from the highs of the day, that stock as well has lost close to around 8%, 200% up in the last 12 months. I think a 6-month, majority of the move has come in the last 6 months or so. And, in today's trading session, some bit of profit taking is what we are seeing. Well, let's focus on trend though. Mangalam is still standing by. Mangalam, yesterday you had a initiation report that said trend to the high point of the day. Today, Kotak thinks otherwise, and the stock is actually one of the underperformers.
Difference of opinion is what the market is made of, right? Yesterday, Elara believed that maybe the company would continue to compound at higher levels with Zudio holding on to its moat and Westside playing a supporting role, whereas, Kotak believes the exact opposite, saying that maybe there could be some cannibalization for Zudio and Westside isn't growing as fast as they expected it to be. The stock already has corrected about 26% from highs. It's, rallied about 96% in the last 12 months, despite the correction that we're talking about. And it was high yesterday because Elara had a target price of close to 8,500, very close to its previous all-time high of close to 8,200 as well. And today, Kotak has downgraded the stock to sell from add. Why is that? Because they believe going forward, incremental revenue growth per store may actually be slower due to potential cannibalization. This cannibalization is something that we had seen in Jubilant Foodworks as well, when, they were opening Domino's stores across the street from one other as well. And all of that impacted the same store sales growth. Could there be a case for Zudio as well? Because they believe that, if that were to happen, then the growth that the street is expecting could be much lower, and as a result of which they've also trimmed their FY24 to FY27 revenue estimates by about 1 to 2% and EPS estimates by around 9 to 14% itself. And as a result of which the target stands revised downwards from 6,800 rupees to 5,850 rupees. So keep an eye out on trend going forward.
Well, let us see if numbers start to come off a little bit. Remember last quarter number, the rate of growth was strong, but compared to what trend usually does, it had fallen. Rate of change matters for high PE stocks. If the rate of change starts to slow, PE start to come off quite a bit as well. But we'll see as the numbers come in. Devin, any thoughts on trend here?
So Prashant, I believe that I think everything is in price. I agree that I think there is a growth, and growth is likely to continue for the format in which I think they are, particularly I think the affordable format like Studio. I believe that I think every aspect of the growth is in price. Probably if the growth expectations are not met, then the valuation will not sustain at current levels. And that's a worry. In most of the cases, when I think you are picked out at the valuation level, I would think that I think one will have to be a little bit more careful buying this stock in the market. Because I guess I think the growth numbers assumed by I think most of the analysts may not sustain, I think, in the subsequent quarters. And that's the reason for which I believe that I think buying at a lower price would be more reasonable than I think venturing anything at this point of time.
Okay. That's the view coming in on trend. Let's get to the big mover of the day, and that's HDFC Life. The stock is up close to about 10%. Yash is joining in with the earnings fine print.
Well, certainly a strong quarter for HDFC Life Insurance as far as the third quarter is concerned, and what that is doing is, making investors believe that other listed life insurance companies as well could have a strong Q3 as far as financial performance is concerned. To be specific about the numbers for HDFC Life Insurance, except for new business premium, which saw a slight miss in terms of street estimates, all other parameters, total APE, retail APE, value of new business as well as margins were much ahead of street estimates in terms of specific numbers. For new business premium, despite that slight miss, it grew at about 11% to come in at about 7,900 crore rupees. Total APE grew at 12% at about 3569 crore rupees. Retail AP again saw a growth of about 12%. Value of new business grew at about 9%. The number there was about 930 crore rupees. In terms of margins, the street was estimating a higher compression to come in as far as margins are concerned, but the company could restrict it to a much lower number. The margin saw a compression of about 74 basis points to come in at about 20.06% versus 26.8% on a year-on-year basis. The management has maintained its guidance for the year in terms of 18 to 20% of APE growth and more than 15% of VNB growth. What also helped the stock price today is valuations. The stock had corrected significantly in the last 3 months as well as in the last 1 month. HDFC Life was down about 19% in the last 3 months and about 8% in the last 1 month. Also, what is helping the stock price today? In terms of brokerage notes, HSBC and Jefferies both have a buy call on the stock with a target price of 750 rupees per share. CLSA has an outperform call on HDFC Life. They've trimmed their target price to about 690 rupees per share.
Thank you very much for that. Well explained. Devin, do you own HDFC Life or any of the life insurance companies?
Yes, I think we have been liking the underlying strength of the insurance businesses, and probably I think though in last 6 months or so, they have had the challenging time with the repricing of some of their products and repositioning of some of their products in the markets. I believe that they have successfully overcome that challenge. I think when you look at the third quarter number, particularly for HDFC Life, the second quarter versus third quarter numbers, I think definitely suggests that I think the product portfolio and the pricing of the products, I think, has basically worked well for them. It is also getting reflected into part of the margin improvement on a sequential basis. So, considering the fact that the fourth quarter is expected to probably produce faster and better rate of growth because of the last quarter of the year, I believe that I think the numbers would show up smartly in the fourth quarter. So certainly the stock on the embedded value to EBITDA is right now putting at a reasonable price. I don't think it is premium as it used to be earlier. So certainly, I think that demands some amount of attention to adding to the portfolio. I agree that the upside will be slightly limited, but at the same time, I think the re-rating of the business, I think on the insurance side, is definitely on cards.
Okay, thank you very much for that. We will slip into a very short break on that note. But here is some good news for all our viewers, because India's business news leader is now just a click away, introducing the all-new app. You can get instant access to breaking news, all the in-depth articles, financial world updates at your fingertips. So don't forget to download the CNBC-TV18 app now from the Apple or the Google Play Store and just scan the QR code on your screen.
Okay, welcome back. 90 points, 23,300 is where we are at. Nikhil Ranka is with us, CIO Equity Alternatives at Nuvama Asset Management. Nikhil, good to have you back on the program. Thanks very much for your time. So first, a market view, Nikhil, because this entire episode of big FII selling started. I remember it was a turning point, and we had a conversation, and you were early on it. Do you have a definitive view on how this will pan out? It's muddy and unclear. What's the view?
So good afternoon, Prashant, and thanks for having me on the show as always. If you remember, in the month of October when we had turned a bit cautious on the markets, from October onwards to now, we have seen close to $25 billion of selling in the Indian markets. And at that point of time, if somebody would have said that, we will see $25 billion of selling and markets would be down just 10-12%, we would be very happy with the outcome. Now, what has happened is, in October, the same thing had happened with Chinese markets, where FIs were significantly underweight that markets. And at the slightest positive news, there was a scurry to add on to positions in that market. The same thing has happened over the last 3-4 months with the Indian markets, where FII positioning is now at a 15-year low. In terms of data points that we typically track, if you look at the FII positioning on index futures, they are now short to the tune of close to $2.5 billion. And another interesting data point is, after a long time, we are starting to see the GIFT Nifty trading at parity to Indian Nifty. So typically it used to trade at a discount of 20 to 30 points, which was indicative that there was shorting pressure from FIs. But now we are starting to see parity between the two, and that's the first sign that probably FIs will now start covering their short positions. If and that happens, I think the up move can also be equally swift in the markets. The second point is, if you look at the earnings outlook, the rupee depreciation has given a natural cushion, I think, to the earnings downgrade cycle. Because if you look at IT and pharma sectors, it's a dollar P&L over there, which gets multiplied by eventually the rupee dollar rate to get at the final EPS outcome. The rupee depreciation of 3% and some bit of margin benefits because currency has depreciated by 2.5-3%. Would mean that there could be some upgrades in IT and pharma, and therefore our view is overall the risk of earnings downgrade from these levels for the markets is extremely low.
Nikhil, hi, Rima here. But we've seen some wild moves in IT this time in the earnings season. TCS went up 5%, HCL Tech tanked 7-8%, perhaps more, and today LTTS. It's not that the numbers were completely out of whack compared to expectations. But we've seen some big moves. How do you position yourself on IT now?
So, Rima, what has started to happen in IT now is more than the numbers. People are starting to watch out the commentary of the management. So, in the specific instances that you have told, TCS earnings were weak, but management said that they are seeing first signs of discretionary spending coming back. In the case of LTTS also, they have very clearly said all the three verticals should start seeing some growth. And therefore, the reactions are more than numbers, a function of what the management outlook is. Wherever we are seeing that management commentary is extremely good for the next 2-3 quarters, in spite of numbers being subdued, we are seeing stocks reacting on the upside. My sense is IT should more be a consolidation band. One, because they have not corrected as much as the broader market has corrected. No doubt there is some cushion from the rupee depreciation that has happened. And therefore, to that extent, from an overall perspective, the view is that the upside could probably be restricted to single digit in most of the IT names. But on the downside also, I don't think that these stocks will, fall 10-20%. I think it's a trading band of plus 10 to minus 10 in IT stocks. That's the broad outlook that we have for IT.
Okay, hi Nikhil, good afternoon and good to see you, Ben. What about the ones that are not for the faint-hearted? OMCs, it's all probability Q3 is going to look blockbuster. Though the prices are indicating nervousness still, and you have crude oil prices that are spiked up yet again. So how do you approach OMCs, and what about specialty chemicals? I recall there was this phase that everyone was jumping in, and then those stocks saw very, very sharp drawdowns, 20-30% on a couple of names as well. What's your view on both these two?
So good afternoon, Nigel. So on OMC specifically, if you look at it, Nigel, the street has got concerned because crude oil prices have moved from $72 to $82. Now, if you look at the sanctions that have got imposed on Russia and some of the tankers, the total quantum of crude oil that is at risk from these sanctions is close to 2 million barrels per day. If you look at the OPEC spare capacity, that's sitting at close to 6 million barrels. So even in the worst case, if we assume that these 2 million barrels do not find alternative routes, because the last time also this thing had happened through some way or the other, this eventually hit the markets. Our OMCs also enjoy discounts as high as $10 to $12. But I am saying leave that apart. Even if this doesn't come into the markets, OPEC has enough spare capacity to pump 2 million barrels and stabilize the markets. And therefore, our base case is eventually the up move in crude will not sustain. Crude should head back down again. And therefore, at these levels, two things are positive for OMCs. One, if in the budget we get some element of subsidy for the LPG losses that they are suffering, the estimate is anywhere from 30 to 35,000 crores that they should get reimbursed for LPG losses. Then obviously numbers will start looking very good. And most of the OMC names are now trading at close to 4 to 5 times EV/EBITDA on an FY26 basis. So as and when we see crude starting to reverse, I think the up move can be equally swift in these counters. Anyways, our view is from these levels, given that GRMs also are showing strength, the downside in these names is extremely limited from the current levels. On specialty chemicals, Nigel, specifically on the refrigerant space,
Yes.
We saw that up move. There were talks that there are price increases that these companies are contemplating, and obviously if that happens, there's a potential 20% EBITDA increase that can happen for some of these names. But a large part of it is actually factored into valuations because most of these stocks are trading at close to 25 to 27 times FY26 EBITDA. On the agrochemical space, we still feel that there is pressure on margins and the outlook there has not changed so significantly. So we are not positive on specialty chemicals, focused more on the agri side in that sense. But yeah, some of these names I would say on dips will start to look very, very interesting.
Right. Nikhil, for those who are not constrained by sort of, running a portfolio, right, and who can and who kind of more flexible in what they can do. Just as an approach this year, do you think it'll be it's one of those years where you're going to see lots of ups and downs and more trading kind of market, or you think or you think it the steady move higher and higher that will return at some point? What's your sense?
So, Prashant, historically, if you have seen, Indian markets have delivered compounding in the range of 11 to 12%. And the maths for that is very, very simple. You have 6-7% of real GDP growth, 4-5% of inflation. So on a nominal basis, we've compounded our GDP at close to 11-12%, and that is the historical stage year of Indian markets. Last 4-5 years were exceptionally good for us. We have seen returns in the range of 18-19%. And so to that extent, we will have to temper our expectations that the market returns will again start looking more in the range of 10 to 12%. Having said that, our view is that 23,000 to 25,000 should be a near-term range for the markets over the next 6-7 months. And I think what everybody is looking for is what happens when Trump assumes office on 20th. If we do not see any ugly tariff wars in the first week of him assuming office, then obviously that will soothe a lot of nerves and markets can start to rally back again. So I think a lot of things will get clearer in the next 7 to 10 days as to which way the geopolitical things are moving. And once that happens, I think the extreme and heightened volatility that we have been seeing in the last 2.5 months, that should subside because anyways, even if you look at the positioning in the markets, the single stock HNI futures open interest, which was at close to 1,65,000 crores, has now come down more closer to 1,30,000 crores. So there has been reduction in speculative positions that were there in the markets. And to that extent, the market is looking much lighter now as it was as compared to 2-3 months back.
Okay, so a broad range, 23 to 25 on the Nifty, and more clarity in the next 7 days or so. One thing is clear, it's going to be lots of news flow. How much of it will be consequential for markets over the next 7-10 days, we'll have to see, as Nikhil pointed out. Thank you very much, Nikhil, for joining us. Good speaking with you, and good conversation, as always. Now, Reliance is set to report numbers and third quarter earnings. Rima will tell us what to expect at an aggregate level. And then, of course, as we get into it, we will, of course, look at individual segments, etc. a little later. But headline, Rima, what are we expecting?
Well, the key will be the margin improvement at the EBITDA level, because revenues will be flat, but EBITDA should improve on a quarter-on-quarter basis. And this will be driven by, one, the oil to chemicals business. Now, O2C has been under pressure in the first half of the year. But in the current quarter, we've seen the Singapore GRMs inch up. So Singapore GRMs went up from $3.6 per barrel in Q2 to about $5 per barrel. So therefore, the refining margins for oil to chemicals should push up, and this will drive about a 10% increase in the oil to chemicals EBITDA. So that's going to be driver number one, that O2C, after 2 tough, challenging quarters, is now looking a lot better in Q3. Secondly, for telecom, it would be the second consecutive quarter. Now, remember, Reliance Jio and the entire industry hiked prices in July. Now, typically, it takes about 2 to 3 quarters for the full pass-through to take place, because some people may have a 3-month, package. So therefore, for the full recharge to take place for all the customers, it takes about 2 to 3 quarters. So this would be the second consecutive quarter. Even the prior quarter was strong because of tariff hikes, and so will the current quarter be. We're looking at about 7% jump in the company's EBITDA for Reliance Jio, and the ARPUs, the average revenues per user, should inch up to above 200 rupees. 205 is the level that we have, and retail too should have a relatively decent quarter, again aided by festive season. Where we could see pressure would be the upstream EBITDA. So upstream EBITDA margins could come under a little bit of a pressure on account of lower production. So that's a nutshell for Reliance Jio. The focus will be on improving operating margins, improving EBITDA, driven by oil to chemicals, telecom, and even retail will have a decent quarter. But brokerages are turning upbeat on Reliance Industries over the last couple of days. And the key driver is that last year, Reliance Industries declined for the first time in 9 years. So it's gone through a period of underperformance, and this year, this earnings performance is likely to be steady. So refining will have a better year, telecom should have a steady year, and even retail, even if there is no pickup in consumption purely on account of a low base, the expectation is that retail will have a double-digit EBITDA in the current year. And plus, if there is monetization in the form of any IPO for retail or Jio, that would be the additional kicker the street is watching out for. But that's about Reliance Industries. Typically comes out closer to 7 p.m. Axis Bank also in focus ahead of its Q3 numbers. Abhishek joins in for more.
Well, it's expected to be a weak quarter for Axis Bank. Our poll suggests the NII growth on a YOY basis may be one of the lowest that you are seeing in last 13 quarters. Now, deposit and advances growth will be seen closely. Now, Citi estimates deposit growth of 11% YOY and 3% quarter-on-quarter, which is higher than the industry average, while they estimate, advances growth of 10% YOY and 2% quarter-on-quarter, which is lower than the industry average that we had as per RBI data at the end of December 24. So, net interest margin may decline both YOY and quarter-on-quarter. Kotak Securities estimates 11 basis point decline in net interest margin YOY and about 4 basis point on a sequential basis. Slippage is expected to rise quarter-on-quarter. Again, Kotak Securities estimates a slippage of 5,000 crore versus 4,400 crore in the previous quarter. So asset quality expected to deteriorate. Citi estimates gross NPA ratio to increase by 20 basis point quarter-on-quarter and net NPA ratio to increase by 10 basis point on a sequential basis. Provisions can remain elevated, thereby impacting the earnings momentum. Again, Kotak Securities estimates 198% gain with respect to provisions rising on a year-on-year basis and 5% increase on a sequential basis. Near-term, loan growth outlook and deposit growth outlook will be seen closely. Deposit is becoming a challenge for the sector. Our poll suggests NII growth of 9% YOY and about 1.5% sequentially. We are working with a profit growth of 3.5% YOY and a decline of more than 9% quarter-on-quarter. Back to you.
Thanks a lot for that, Abhishek. Well, time to slip into a short break, and as always, we'll get you I'll check into dealing rooms. Nimesh will be joining us in a special segment, D Street Chatter. A couple of trading ideas as well coming in on our buy today, sell tomorrow. Our technical experts will be back with us. Welcome back. Well, no big fireworks as yet in the final, 60 minutes or so. We are more or less flattish. But I'll tell you what, pull up the IT index. The street is getting a little bit nervous about tech right now. Infosys has moved to the low point of the day. I'll tell you what, if, we saw what happened with TCS, may not be such a bad thing. A stock goes soft into its numbers, deliver an inline performance, don't disappoint too much. May not be such a bad thing, but for the time being, the tech stocks have moved a little bit lower. As promised, Nimesh is with us. He's here to tell us about what he's picking up in D Street action. Nimesh, take it away.
Hi, Nigel, a strong day. At least we've held on to the early morning gains, and there is no selling or profit booking, so to speak, after the gap up. And again, the broader markets are outperforming, so that's a good sign. The mid-cap index is up 1%, but a lot of individual names are buzzing and are rallying in today's trade. So at least looks like the near-term upside momentum in the broader markets have resumed, and there is a bit of interest as well from retail and HNI category. So that's overall feedback from a flow perspective. On the institutional side, though, again, it's a mixed day, but flow seems to be slightly on the positive side now, especially in select large cap names. And within sectors is the financials, and within that, the PSU banks have done well, and some bit of traction seems to be back in the metal names today. So a bit of buying there as well is what I understand. Technically, we are very close to that crucial support of 23,300. The feedback is if that gets taken out, you will see a further short-term, very fast rally on the Nifty and the Bank Nifty. So that's something which the bulls will like to defend. But three big results to watch out today. Infosys will react. Reliance will be a big number to watch out for, and of course Axis Bank as well. So a bit of position there. But I guess at least from a flow perspective, looks like some bit of selective buying in large cap has driven by larger institutions.
Okay, Nimesh, and what about stocks? What have you picked up?
So in terms of individual names, the first stock is Alchem Labs. Well, the stock has been consolidating. I understand there could be a corporate development very soon. A potential inorganic move is what I understand the company is looking for. And it's likely to be a domestic acquisition. But again, this is something to track in Alchem Labs. So that's the first name. The second stock is Godrej Properties. Across the real estate name, some bit of buying is back, and Godrej stands out largely because of very strong buy flows. Expect high delivery volumes. And after the recent correction, there is a bit of interest back in the real estate names, including Godrej, DLF, and others as well. The third stock is Nazara Tech. That stock reacted very sharply to the announcement of a board meeting on Monday. There is a board meet for fundraising via pref issue. Understand the existing shareholders are likely to invest, and that could potentially trigger an open offer as well in Nazara Tech. So that's something to track on Monday as to who gets into the preferential allotment. And the last is Sammaan Capital. Again, after a long time, some bit of interest is back. The stock is reacting today, good volumes as well. Again, for Sammaan Capital, the fundraising is lined up. I understand a leading long-only fund is an active buyer already in the market, and they may potentially, come into the fundraising as well. So, looks like there is something on the cards as far as fundraising is concerned in Sammaan Capital.
Nimesh, with Nazara, are the existing promoters looking to sort of play a smaller role? Because are these existing large shareholders which are looking to sort of increase their holding?
Well, it looks like, Prashant, because if you look at the shareholding pattern, the promoter holding is very low at 9%. It's largely owned by institutions. And within that, there are a couple of names who own a large stake, right? So my sense is that the large part of the pref issue will be done to those large institutional investors. And within that, one of the guys will actually turn out to be more than 25%. So potentially there could be a open offer as well after the preferential allotment is done to those large institutional investors.
Okay, all right. Nazara on your screens, 996. Otherwise, of course, the stock has been in focus for the numerous acquisitions it has made over the last sort of 2 years or so. So that's when, of course, we've had them on the program. The low this month, by the way, in January was 876. And it's essentially recovered about 100 rupees from the lowest level, about 10%, 12%. And of course, up about 7% as well. So it's been ranged for a long time. It's at levels where it was in 2021 or so. Well, let's get Mitesh in to talk about some of these names and, of course, his view on the market trades. Anything new, Mitesh, out there?
So I have a BTST and Dabur. I think, after a good consolidation, the stock is showing first signs of a break on the upside. And while the pivot is at about 530 for the closing basis, or BTST for a target of 530 can be taken, and keep a stop at about 517 half or thereabouts. And the other one is BTST and Kotak Bank, which has stayed positive. And here I would recommend a BTST with a stop at 1794 for targets of around 1825, 1830.
Okay, Paytm is a big mover today on the back of an MK note. Abhishek tells us why MK likes Paytm.
Well, MK has upgraded Paytm to buy from at. They have increased the target price to about 1,050 per share from 750 that they had earlier. They say that the recent NPCI approval in October 24 has released a major regulatory overhang on the company. So this should help the MTU base get built up again over the next 12 to 18 months. The cross-sell retail financial products like home loans, insurance and wealth products, that will help in improving the revenue per customer or per user for them. So Paytm may be on early path to profitability by FY26, post which profits will keep on increasing as per their estimate. They also say that Paytm's cash to market cap ratio is at 21% when compared to 5% for Zomato. Now this provides strong margin of safety for investors. So additionally, a further easing of regulatory stance via potential approval for payment aggregator license, that could be another positive catalyst as per MK for Paytm. Back to you.
Thank you very much for that. Amrish Balika is now joining us on the show. Amrish, first, your thoughts on the market. Do you think the worst is now over? We've priced in and markets should head up now?
Good afternoon, Rima. I don't think that the markets have begun their upward journey. After close to a 3,000-point fall in the last 2-3 months, and if you see the last few days, it's been a 1,000-point fall. It's quite natural that you'll have some amount of bounce back. And let us not mistake this as a fresh run-up. I think we should still see further lower levels. And that could happen possibly, once Trump is sworn in, once we have more results coming out for Q3, where I see more of a disappointment than surprises. I'll not be surprised if we see levels of closer to about 22,000 or so on Nifty. And I think that would be more of a buying level than the current levels.
Okay, all right. By the way, I wanted your view on some of these sugar stocks because we are expecting some announcements to come in there. But Balrampur Chini has moved down. So there was that hope that we'll hear something on the ethanol price increase. And the street could have been a little bit nervous about the quantum of it. But at least as of now, pull up the intraday chart of Balrampur Chini. From the highs of the day, actually, it's seen a sharp drop because as of now, at least we haven't heard anything with regard to that increase. The intraday chart comes up for you currently at the low point of the day. So some disappointment playing out there. Amrish, what's your view on this space? There is hope that, there could be something in terms of an ethanol price increase. The quantum will be debatable and also maybe some relief on the export front of sugar. Your view on these stocks that have come off from the recent top?
See, in the last 2 or 3 days, we've been hearing those rumors about the ethanol prices, which I think came just this morning. And we had heard about the export quota being increased. This was about 2 or 3 days back. But as of now, there is no official announcement. But the way I read it is that both these need to come because whatever said and done, we have seen that the rupee has become weaker. Oil prices are going up. So somewhere we need to protect our import bill to a certain extent. So I think these announcements should come sooner than later. So I would be a buyer in the sugar stocks on this correction because we have seen Balrampur Chini at a much lower level in the last 3 or 4 days. So I don't see it going to those levels again, but closer to about 450, I think it's a decent buy.
Okay, you have a pick as well, and we'll come to that in just a bit. So just, in a bit from now, what we're going to do is take a break here, but play out a very small snippet of a special interview with the US envoy to India, Eric Garcetti. Of course, he's the sort of outgoing envoy as Trump comes in. There'll be new appointments. He spoke with my colleague Parikshit on the latest Israel-Hamas ceasefire deal, the growing India-US relationship, and of course the incoming transition and Trump taking office on the 20th. Listen in.
I think the announcement yesterday is welcome. We have too much war in the world today. We are both peaceful countries that want to see conflict. As the Prime Minister said, this is not an era of conflict. It should be an era of peace. And I hope we can see hostages come home and we can see violence reduced and that we can finally see armies be able to retreat and communities be able to recover. That is the most important, and for families to be reunited who for so long have not been.
Right. But what do you think? Do you think now this would lead to lasting peace in the region?
Well, lasting peace isn't just achieved one day. It has to be accomplished every single day. And I think one of the places where India and the United States can work on that peace was the announcement during G20 of IMEC, the India-Middle East corridor, a way we could connect literally that old spice route that connected India with the Middle East, or as West Asia as it's called here, and Europe. This could be a way to embed peace across borders where we've seen too much conflict, investment to flow, tourists and visitors to come to these areas, and whether it's communications cables, or whether it's energy infrastructure, or whether it's the trade of goods and services, create jobs that...
Okay, well, more of that interview later during the course of the day, but this is some important information which my colleague Timsy is picking up. Now, government is considering reintroduction of the concessional corporate tax rate. This is source-based information at the bottom of the screen. Timsy is joining in with details. Timsy, a little bit of background to this and what you're picking up.
Well, yes, as you rightly said, what sources are indicating right now is that the government is considering to reintroduce the concessional corporate tax rate. Remember, the concessional corporate tax rate regime was brought in September 2019 for setting up new manufacturing units at 15% plus surcharge. And this scheme actually phased out. There was a sunset to it, and March 2024 was the sunset when it lapsed. India Inc. has been pitching for a reintroduction, and this currently is under active consideration between North Block and PMO as they finalize the budget announcement. But yes, a sort of a change here in the reintroduction. The rate this time that will be offered, if agreed upon, could be a little higher at 18% instead of earlier 15%. So the idea behind this reintroduction that the government is considering is that it feels that bringing back the concessional corporate tax rate scheme will help to promote Make in India, create more employment and enhance manufacturing, which is the need of the hour to kickstart the economy in the given current scenario. The view that we are picking up is that India is pitched really hard this time for a reintroduction of this scheme, and thus the government is currently mulling upon how best they can reintroduce the scheme. As of now, if you want to know what is the exact status of the proposal, well, as I said, the proposal is under active discussions between North Block and PMO, and no decision has been finalized because taxation decisions for the budget are made only 2 or 3 days closer to the budget. So right now, the proposal is under active consultations, and it could be that the government this time might decide to reintroduce this scheme, but yes, at a higher rate. Let's see what happens finally when the budget is finally being logged from the taxation side. Back to you.
All right, Timothy, thank you very much for that. 18% now. Earlier was 15%, but reintroduction is the more important bit with a slightly higher tax rate. We'll get
by
you...
the way, sorry.
Yeah.
Go ahead, finish.
No, I was taking a break, please.
Okay. Infosys has moved to the day's low ahead of its numbers. So that suddenly tanked in the last 10-15 minutes. It's down 1.5%. Remember, Infosys has also been an outperformer. It's up 30% in the last 1 year. And what we've seen so far in the earnings season is stocks which have outperformed, like in HCL Tech, despite reasonably in-line numbers. The stocks are falling, and Infy too is a bit under pressure ahead of its numbers. LTI Mindtree, on the other hand, which has been an underperformer, is inching up 2.5%.
Yeah, the bears are saying that it's been an outperformer. It could come in for a clonk. The bulls are saying not such a bad outcome. TCS went into its numbers weak, and then there was a pleasant surprise. So we'll see which way the wind blows tomorrow.
TCS, the stock which at the start of the earnings season, the stock which was expected to do very well is Infy on the back of numbers.
HCL Tech.
TCS came out of nowhere with that 5% pop that day. But generally, it's well advertised that numbers for Infosys should be better, at least amongst the large caps. So we'll see what actually happens. But this is, of course, pre-results trading, positioning, and all of that going on. So yeah, it's come off. We take a break. We are back. Ambrish is with us. There's 6 minutes to close, and we'll get you that stock which Ambrish has picked out for you as well on the other side in just a bit. Stay with us.
Welcome back. Last few minutes to go. Infosys going into its numbers at the day's low, but a couple of these OMCs have moved up. BPCL as well has spiked up in the last few minutes, and Reliance Industries is going into its numbers rock solid after the recent underperformance. Very quickly, Amrish, if you could give us, you normally give us one pick. Which one is it this time around?
Right. Today's pick is Federal Bank. This was originally set up as a regionally focused bank in Kerala, but now has pan-India presence with about 1,333 branches and over 2,000 ATMs across 26 states and 5 union territories. About 609 branches are situated in Kerala, and they have 2 rep offices in UAE. And if you look at the semi-urban presence, it's about 50%. Retail book is about 56%, wholesale is the balance 44%. And in retail, the focus is on gold loans, loan against property, auto loans, credit cards, personal loans, and microfinance. And in wholesale, they have clients across MSME to MNCs, but the focus is clearly on the mid-corporates. Look at the numbers. The NIMs are about 3.1, CASA ratio is about 30%, gross NPA at 2.1, and net NPA at 0.6, which is quite decent. And recently, there was a management change. KVS Manian, ex-Kotak, has taken over as MD and CEO. And in Kotak, he was driving retail banking. So here, too, the focus is clearly going to be on retail, where the margins are much better. And if you look at the loan growth expectation, it's going to be about 18% CAGR over the next 3 years. NI and PAT growth should be about 19%. So my target is about 258 based on 1.5 times adjusted book value for FY27.
Amrish, what about something like an LTTS? It's been a bit of an underperformer. The management is saying that we'll see broad-based growth in Q4, even in FY26. Discretionary demand is a lot better. Given the underperformance ER&D companies have gone through, is it time to bet on them versus IT services?
I think one should, because looking at the management commentary, I think that could be one of the brighter spots.